What's going on, guys? Welcome back to another video. In this video, we've got another update on AMC. So we've got a very interesting margin requirement update from Charles Schwab that we definitely need to go over in detail and explain exactly what this could mean for the week ahead and the couple of months that are actually ahead as well. We're also going to go over some of the key points on why the short interest data may not be correct, and it could be much higher than the current time. Now, I haven't gone over this reason for the short data yet in any one of my videos, so make sure you guys stick around so you're up to date and you know all of the possible theories on what is going on with AMC. So before we get into all of that information, if you guys would like to earn 2 free stocks with Webull valued up to $1,850 and help and support the channel, make sure you check out that link in my description down below. And if you guys enjoy this video, make sure you hit that like button. It costs you nothing to do it, but it helps me out a whole lot in getting this information out to as many people as possible. And again, as always, if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So looking at the chart of AMC, we can see that it sold off a significant amount, did have a good day on Thursday, then it kind of bounced around and sold off on Friday. Now, we did see a small bounce in the after hours, but there has been some very interesting price action going on with AMC, and the overall market has played a role in this as well. We have seen some overall weakness in tech, and that has been causing some volatility across the board. So now let's get into this Reddit post and see exactly what is going on with AMC right now. So when we come over here, we can see that this Reddit poster, FlavorDave22, we can see that he's posted a screenshot of some link to Charles Schwab's website. So if we come over to this actual link, we've adjusted margin requirements on certain securities. Due to recent market activity, we've adjusted margin requirements on certain securities. Please note, neither Charles Schwab and Co. nor TD Ameritrade halted clients from buying any stocks or selling any stocks they own, and neither firm restricted executing any basic option strategies. However, we've raised margin requirements on the following securities. We'll keep this list updated with the latest information. So the 2 stocks listed, AMC and GameStop, the following requirements are in place for affected securities. So stocks, 100% margin requirement for long positions. This essentially means that you can't use margin to buy any AMC shares, since you need to have 100% of the actual position size in order to buy on margin. So the margin is negligible. You really are getting nothing. And then you need 300% margin requirements for short positions. So what this means is that if you wanted to short $100 worth of AMC, you would need to put up $300 in collateral in order to do this. We can see that long calls, long puts, and covered calls are permitted, and selling short put options is permitted if you have available funds to cover the entire amount of the exercise. So that essentially means cash secured puts are allowed, but selling naked calls is prohibited. So there is a lot to break down here. Selling naked calls is prohibited. What this looks like is that Charles Schwab is trying to protect itself and some of its users, and it also sees that the conditions in the market right now are very similar to what they were seeing in January. So now if we come over to this other Reddit post, we can see that the actual margin requirements in February, as this post states, was 150% for short positions. So previously in January, these were the correct numbers, and then in February, it switched down to the 150%, and now they're back up. So this suggests that these brokerages have some information and they see what's going on in the market, and they do think another possible huge squeeze could happen. Now, the fact that they are prohibiting selling naked calls could result in less of a squeeze, but really when you think about it, the hedge funds and the institutions aren't using Charles Schwab to actually execute these trades, so this doesn't really matter that much to them. But what this could be doing is it's setting up Charles Schwab and maybe even TD Ameritrade, as it says right here, that they will not have to halt any type of trading on these 2 stocks if a situation like we saw in January happens again, which would be very good. So when we saw that trading halt, there was a lot more selling volume and no more buying volume in the market, which really pushed the share price of GameStop and AMC down. This time, it is possible that we don't see that, which could send the squeeze going even higher. So essentially, my takeaway from this update right here is that Charles Schwab does expect January conditions to occur again, maybe not now, but sometime in the near future, and that would cause a massive squeeze. Now, let's get into how I think the hedge funds are all lying to us in a big way. So now if we come over here, we can see that Market Beat, if we come up here, has the percentage of shares shorted on AMC at about 11%. Now, we've gone over a couple of reasons in my last AMC video on the dark pools and how this could be wildly inaccurate, but I want to talk about something new that I haven't really seen anybody talk about. So if we come over here on Finra, we can see the short interest reporting instructions. So essentially what this is going to tell us is that it's all self-reported. So pursuant to Finra Rule 4560, member firms are required to report total short positions in all customer and proprietary firm accounts in all equity securities to Finra on a bi-monthly basis. These filings are made online using the short interest reporting system, accessible via firm gateway at firms.finra.org. Now, if you were Citadel or one of these other massive institutions, you could do a pretty interesting cost-benefit analysis and think, well, if I misrepresent the amount of shorts that I have, what is my fine going to be? So I don't think anybody has really said this, but we can see Finra fines Webbush Securities for misreporting of short positions. Now, if we read through this, we can see the United States Financial Industry and Regulatory Authority has imposed a fine of $90,000 on Webbush Securities. Now, let's see exactly what they did. So if we come down here, under this system, the cash account would appear to be short in the security, and the company's system for reporting short positions did not offset these unsettled sell orders by the corresponding long position in the customer's margin account. As a result, the company misreported its short positions in equities on all 14 of the bi-monthly reporting dates during the review period. It reported a total of 1,911 short positions, totaling 23 million shares, but it should have reported only 1,700 about short positions, totaling 21,000 shares. So they actually over-reported, so they were only fined about $90,000, which is extremely low. And this wasn't really predatory. This was just basically a mistake made by Webbush. Now let's take a look at a different one. So we can see that a firm, doesn't really mention who it is, settled Finra charges for failure to comply with short interest reporting requirements, related supervisory failures concerning certain foreign listed securities. So we can see that a failed to report 3,129 short interest positions due to a system-related coding issue that excluded certain foreign listed securities from the firm's short interest submissions, and incorrectly reported 6 short interest positions totaling 6,790 shares when the short positions actually totaled 68,724 shares. We can see that after Finra notified the firm of the reporting errors, the firm corrected the coding issue in November 2015. To settle the charges, the firm agreed to a censure and a fine of $300,000, $200,000 for the short interest reporting violations, and $100,000 for the supervision violations. So as you can see, these fines for misreporting the short data that the companies are giving to Finra are extremely low. Now, I would say that Citadel's actual numbers that they could be reporting, or any other of these brokers that are reporting their numbers to Finra, are also going to be extremely low. We are not seeing massive fines. And even if the fines were $10 million, $20 million, even $50 million, the fact that they would be able to misreport their actual short position and be able to push the share price back down and then cover would save them much more than $50 million on this massive issue. Now, the main reason that I think there is a lot of misrepresentation going on is this OTC data. So we can see that OTC non-ATS data, we've gone over this in all of my AMC videos, so we are only going to go over it briefly. So non-ATS excludes dark pools because dark pools are ATS. Now, we did some calculations in my last video on how many potential shares have been traded in the dark pools, and that is an absolutely insane amount. Nobody really has talked about that yet. So if you guys want to go see my previous AMC video, make sure you guys go check that out. But we don't really know exactly how many of these shares are held by Citadel, if they're buys or sells, shorts, anything. We don't have that information, which is why I think that it's very easy for these large institutions to come out and just underreport how many short shares that they have in hopes of pushing the share price down in order to buy their position back and cover their massive shorts. So moving back over to the chart of AMC, I do not think that we have seen the squeeze yet. I think we are just at the beginning, and this could be drawn out for another couple of months. We are seeing some wild price action every single day with the barcoding and the massive sell-offs for no reason when the massive short orders come in. I do think that it is very possible to see a squeeze way bigger than we saw in GameStop in the near future. So that is going to be it for this update on AMC. If you guys enjoyed the information that I provided for you in this video, make sure you go down and hit that like button and hit the subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. And if you guys would like to earn those 2 free stocks with Webull and help out the channel, make sure you check out that link in my description down below. These free stocks are valued up to $1,850, and it is basically free money. So I hope you guys are having a great weekend, and I'll see you guys in the next video.